What is up, YouTube? Welcome back to Stocks by the Numbers, and today we're jumping in. We're doing a quick video here of another brand name old age company that I just wanted to take a look at because I know they were in the news recently talking about the New York Times, and the company that we are discussing today is the General Electric Company, ticker symbol GE, listed here on the New York Stock Exchange. Market closed a handful of minutes ago. Stock closed here at 81.45, down a little over 2.5% today. Excuse me, down a little over 2.5% today. And we're going to see moving forward if we should potentially take a position in the company or if we should just kind of hang out and wait for a little bit of a better entry. So we're looking at a market cap of $89 billion. And as you can see, the company is paying a slight dividend for you to own shares. Now, they bought out, apparently, the entire New York Times print paper advertising sector, and they basically just took over the business. Now, this can be viewed as one of two ways, right? First of all, if your company has been struggling, as we see year to date down 15%, down almost 43% over the course of the last 5 years. So, yeah, I guess buying out the New York Times and, basically printing your own stories could definitely help out your business. However, only time will tell. Right, so that's why, in my opinion, when I heard about the story here, it could be good, but at the same time could kind of be a Dunsky move, right? And we can turn around in 12, 18, 24 months, and every analyst could start ripping apart that decision by General Electric to step in and take over the New York Times, right? So only time will tell, really. And again, in my opinion, not to sway or influence any of you, but when I heard that headline, it didn't make me a buyer, right? Like, it could be good for the company, but I'd personally give it some time, and let's see how it works out for them. But I wanted to come down here and look at the numbers because quarterly, as we can see, this company has really been bouncing around. 18.5 billion up to 20, goes net income negative, and then again, the company has since been net income negative since the end of 2021, really. Revenue has been slightly increasing quarter over quarter. However, again, net income negative. And if we look over here annually, you could just look at the slight sell-off here in business overall, with total revenues touching almost 100 billion back in 2017, and then dropping to 97, 90, 76, 74. Right, so this company has been struggling overall with their business, even pre-2020. And that, in my opinion, is a massive red flag. And if we switch over here to TradingView, I just wanted to show you guys, if we look at a one-year chart, as you can see, this is the 20-day, what do I have here? Yeah, simple moving average, 20-day. And you can see it's right at around that level. And more importantly, again, this is a one-year chart. You can see this was the resistance bounce, and of course you have a lot of action here going back to April of this year. So you can see that this is going to be a main pivot point, but in my opinion, like I said, the company just came off a little bit of a rage here over the last several weeks, and I feel that it is most likely going to sell off a little bit and start pulling back into the 70s. They have a dividend coming up. Usually, anytime a company pays a dividend, the market will pull them down 1.5% for the day. Reason being, they're paying out to shareholders instead of keeping the money in the company. So usually with dividend paying stocks, you will see a little bit of a hiccup for a day or two around dividend payout time. But if we check over here and look at the financials, which is what I really wanted to show you guys, first of all, annually, you can see that looks absolutely horrific, right? The profit margin did rise up and, again, go positive in 2020, but it's just bouncing around too much. And, just look at that decline year over year in business overall. That, in my opinion, that is a massive red flag. Last couple of quarters have been slowly bouncing back, but I just think overall the company is really struggling. And I'm not an insider in the company. I don't know what's going on at GE, but me personally, I don't know if, taking over the New York Times was the solution to your problem. But again, like I said, only time will tell. This company does not have a PE. Price to sales is sitting here a touch below 1. And a quarter, used to be double that several years ago, but again, has since been pulling back. Price to cash flow, I mean, sitting here at almost 24 times cash flow, but, the cash flow has been dismal, so I don't know if I'd really use that as an indicator. Companies trading almost 3 times book value, which is very interesting because I did a video yesterday talking about General Motors, which I believe had a book value of like 0.8 or something like that. So that's why it always amazes me how sometimes you'll see the company with the overall better business and better numbers trading at more of a discount than a company that is struggling, right? So, just using that one metric compared to GM yesterday, looking at GE today, right? GE should significantly sell off and GM should start to rise. But again, that's just my opinion. I look at the numbers make sense to me. That's just me. We got the enterprise value, as we can see, was in the 400 billion range. This is going back to 2015, 2016. And as we can see, companies just fighting to maintain that $100 billion value here. It's the profitability ratios that really drive a stock price higher or lower throughout the quarters and throughout the years. Because as we see with a lot of other stocks, I'm sure we can come up with a bunch of examples here for this, but as we see, it's not necessarily about bringing in revenue. Because if it costs you $1.50 to make $1, then your company kind of sucks and is struggling, regardless of if revenue is growing, right? Because you would think that, if you're bringing in a couple $100 million, but you didn't make any profits, then you would think if revenue jumped up to 500, 600 million, now you would go net income positive, right? And what we're seeing is with a lot of companies is that even with revenue rising, you're still seeing negatives. Again, to go back to GE for the last couple of quarters, as we can see, revenue dipped down to 17 billion and then rose to 18.5, 19 billion, and the company is still net income negative, right? So going from 17 to 19 billion, losing 1 billion, right? You should technically be net income plus 1 billion. And the company is still, as we can see, negative net income 165 million. So that's why, just looking at these numbers, we don't really have to go down each one like I always do, but as you can see, it was positive, goes negative, fights to go back positive, back to negative now, right? Larger than it was. Return on equity was almost minus 9%, now minus 14.25%. Return on invested capital is basically doubled, going from minus 3.6% to 6.25%, actually less than a double, Gross margin percentage was almost 28%, has dropped to a little over 25%, as we can see, aside from this year here, the lowest over the course of the last 5-6 years. Operating margin percentage has been slowly dwindling, was 6%, now pulled back to 2%. EBITDA, which once again stands for earnings before interest, taxes, depreciation, amortization, a good indicator usually for a lot of companies when people look at the EBITDA to see the healthiness of the business, if you will. And you can see it was maintaining double digits, ran into a little bit of volatility, bounced back, volatility, got back up to double digits, and has now dropped roughly 50% from that level and is now sitting at 5.5%. The net margin percentage we looked before, obviously they're not making money, so it's negative. And I just wanted to show you one last thing here, switching over here to stock charts. And I'm going to take this inspect off because that box is, I'm sure, annoying for you guys. But as you can see here, we have a company that, was really rising and raging for several weeks and is now kind of slightly going into a pullback. We see that the stock closed today below the bottom Bollinger Band. Excuse me, I don't know what it is. It's so dry in this room. I know I'm constantly doing that throughout my videos. I sincerely apologize to you guys. But again, we're sitting here at touch below 81.5, closed below the bottom Bollinger Band. We have a 50-day moving average of 77.83 and a 200-day moving average of 77.35. So, they're kind of meshing into this area here. So most likely, in my opinion, after this big run-up, it will most likely sell off at least to this, mid to high 77 range in the short term. Got the MACD pulling back a little bit, so that's going to help the price of the stock pull back slightly. Here on the weekly RSI, 50 and change, could go either way, but again, as we see here, 200-day moving average 81.46, stock closed 81.45. Right? Now, some people may look at that as a bearish indicator, right? Because it couldn't hold that 200-day moving average. So, you could see a random bounce Monday, Tuesday. However, chances are with the 50-day moving average 80.64 and the dismal numbers we just looked at, and the company just raged for several weeks, chances are, in my opinion, it is probably going to be down, pull back to that 80.5, that 50-day moving average, and then begin to slowly pull back towards that mid-Bollinger Band of roughly 75 and change, and we could potentially even see it drop down into the 60s going into 2023. But just wanted to do a quick review here of General Electric because, brand name company, been around for over 100 years. And, sometimes we hear about these companies that have been around for so long. And, you kind of take a step back after making a wrong decision sometimes. And you say to yourself, like, oh, maybe I should just invest into, like, General Electric. Or, maybe I should just invest into General Motors, because they've been around for a while. How bad could it get? And, listen, I understand that thinking, that way of thinking. And, sometimes there really isn't anything wrong with that. And, overall, excuse me again, overall here, in my opinion, I just want to say I'm not really knocking GE business overall as a whole. However, they really need to pick it up. They really need to start increasing their revenue and go net income positive because, again, in my opinion, in the short term, I do think a little bit of a sell-off is coming here into the stock. And, again, I'm not saying don't buy GE. What I'm saying is, in my opinion, is why force your way in at 81.5 when we could potentially step in at 71.5, right? That's basically the main point that I want to make here. I'm sure you guys can appreciate that. So I'll end it there. But listen, today is Friday. I want to thank you guys for stopping by. I tried to get back into the routine of posting a video every day. I do have a lot going on. I appreciate you guys, not jumping ship and just staying on board here and showing your support throughout the videos. So I do appreciate that. It is the weekend, so I hope everyone's week wasn't too stressful, and I hope you can recharge the batteries and set yourself up this weekend to get ready for next week moving forward. But like I always say, I understand markets are rocky, they're volatile, they're uncertain. So I do wish everyone success. I hope everyone makes a couple of dollars. If you guys have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Just like everyone on YouTube says, if you like the video, give it a thumbs up. Helps out the algorithm, get more people viewing in the channel. If you appreciate the content I'm putting out, push the subscribe button. Obviously means a lot to me personally, seeing my community grow here, seeing the channel grow. And again, it's Friday. So listen, whatever happened in the past, I know it's really hard to take advice like this, but just brush it off. The market is closed. Enjoy your weekend, relax, de-stress, recharge, and we'll get ready for next week and dive in. All right? Thanks for stopping by. Everyone have a good weekend. See you in the next one.